I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the NASDAQ 100 indices. So as usual, we'll start with a look at the S&P 500. This time I'm starting by zooming out quite far, and we're actually beginning with a look at the weekly chart of the S&P 500. And the reason I'm doing this is because there's quite an interesting formation that is evident here, and it's called a megaphone structure, or you can also call that a broadening structure. And you can see it quite clearly indicated by the blue lines there that show the market in a broadening megaphone type of structure. The upper end of that megaphone structure would come in between 3,500 and 3,600. So it looks quite likely that the market is destined to test its prior highs from February and probably break beyond those highs. The resistance area that we then look for beyond that is in that area where the top of the megaphone structure comes in at about 3,500 to 3,600. So keep a close eye on that in the months ahead, but for the short term, it still looks pretty bullish. If we then move on to the daily chart of the S&P 500, you can see there that this market does continue to trend nicely higher. It's above all the moving averages, above the 200-day moving average, above the 50-day and the 15-day exponential moving average. It continues to make higher lows and higher highs. Those February highs, which are around about 3,400, are literally within spitting distance now. So it seems highly likely that the market goes up and tests that prior high at around 3,400. And in all likelihood, we'll probably see the market pushing out and making a new all-time high. It won't surprise me if the headline writers are busy getting their pens ready to start writing about new all-time highs for the S&P 500 pretty soon. If we then move on to the hourly chart of the S&P 500, just zooming in more closely over here, there you can see the upward channel that's been in place over the last couple of weeks through July, and quite clearly evident there is a pattern of higher lows and higher highs. Support is at 3,280. That was a previous resistance in the middle of July. That previous resistance now becomes support into any weakness. So if the market does, for some reason, stage a bit of a pullback from here, then that 3,280 area would potentially be the place where we'd look for buyers to step in. And interestingly, there's actually a gap in the chart at that area as well, which could possibly also act as a support zone. So overall, still bullish on the S&P 500 and still looking for new all-time highs over here. If we then move on to the NASDAQ, this market has already made new all-time highs quite some time ago. This is the daily chart that we're looking at over here, and you can see how the market has exceeded those February 2020 highs some time back. There's a nice, well-defined upward channel evident over here, and that contains the trading action, consistent pattern of higher lows and higher highs. It's bullish. There's nothing not to like about this chart. Above all the moving averages as well, above your 50-day moving average, above your 15-day exponential moving average as well. Support here comes in at around about 10,800, which is where the bottom of that channel would come in. So if the market does consolidate a little bit further from this level, then that 10,800 support area is where we would look for the buyers to potentially step up, and that could introduce quite a nice buying opportunity in that sort of region. Then finally, let's take a look at the hourly chart of the NASDAQ 100. It just zooms in on that trading activity more closely over the last month. And there you can see what I was talking about. That uptrend support comes in at 10,800, quite clearly indicated over there. And also note that there is a gap in the chart at 10,900. So if we were to see the NASDAQ consolidating any further and pulling back a little bit more from these levels, then that region around 10,800 to 10,900 is probably where some support would begin to emerge. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the NASDAQ indices.